ESG ratings are the new credit signal. Campari Group's 2025 investor results are not an obvious read for energy and sustainability professionals, but bury the brand names and the numbers tell a story that's worth paying attention to. A large manufacturer with complex global supply chains is treating ESG performance as a capital allocation input, not a reporting obligation. The tariff exposure, water intensity targets, and ratings upgrades in Campari's disclosure reflect pressures that are not unique to the spirit sector. Finance and sustainability teams across industrial sectors are navigating the same institutional expectations. MSCI said AA. The leverage ratio said 2.5x. Campari's MSCI ESG rating was upgraded to AA in 2025. Its S&P Global CSA rating rose 15 points to 62 out of 100, 25 points above the industry average. ISS ESG placed the company in the first decile of its sector. At the same time, the company's leverage ratio dropped from 3.6x to 2.5x, a year ahead of its own plan. That combination is not a coincidence. It reflects a capital strategy where sustainability investment sits inside the same extraordinary CapEx program as production expansion and IT infrastructure, not in a separate sustainability budget that gets cut when margins tighten. Institutional investors are increasingly treating ESG ratings the way credit analysts treat debt covenants, as a signal about management discipline and long-term risk posture. Companies still treating ratings as a communications exercise are misreading what the capital markets are actually asking for. They hit their 2030 water target. It's 2025. Campari reported a 66% reduction in water consumption intensity per liter manufactured against 2019 baseline. The 2030 target was 62%. Scope 1 and 2 emissions intensity is down 52% over the same period. Combined Scope 1, 2, and 3 intensity fell 25%. Waste to landfill came in at 0.7% of total waste, hitting a zero target the company had set for 2025. These are not small operational adjustments. The extraordinary CapEx program that funded them totaled €142.5 million, 165 members in 2025 alone, and has run at nearly triple the company's standard maintenance CapEx rate for 3 consecutive years. The program is explicitly structured around production capacity, sustainability investment, and IT, treated as a single capital decision, not 3 separate ones. Tariff risk is now a supply chain disclosure. The 2026 guidance section of Campari's results breaks down U.S. tariff exposure by sourcing geography. EU origin products represent approximately 39% of the U.S. business, Mexico and Canada around 30%, Jamaica roughly 3%. Estimated impact, approximately €30 million, $34.7 million, for 2026 at current tariff levels. That level of specificity in a public investor filing is notable. It reflects a direct line from procurement data to capital guidance, the kind of analysis that requires supply chain, finance, and sustainability functions to be working from the same data set. For companies that still treat trade risk and ESG disclosure as separate work streams, this is what convergence looks like in practice. Supplier requirements are expanding. On a schedule, Campari's sustainable procurement roadmap is structured across 6 ESG pillars. Human rights, carbon, and circularity due diligence launched in 2025. Additional pillars are scheduled for 2026. The phased rollout matters more than the total number of pillars. It signals that supplier-facing requirements are not static. They expand on a documented timeline, and what is currently a roadmap commitment becomes a contract expectation. Suppliers who wait to engage until requirements are formalized tend to find themselves behind on compliance and behind on the relationship. The company also reported a 2.9% adjusted gender pay gap with fair pay certification for a second consecutive year and 38.6% female representation in management against a 40% target by 2027. Equity and inclusion data now appears alongside environmental metrics as a matter of routine in institutional investor disclosures, not as a separate social chapter. You've been listening to Sustainability Soundbites by Environment and Energy Leader. For partnership opportunities, please reach out to our team.